Hey everyone, welcome back to Corporate Decoder. Today, Matinas BioPharma Holdings Incorporated, or M.T.N.B, just filed a notice about their stock listing, and I'm seeing some serious red flags that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing reveals the company is struggling to meet the stock market's basic rules and has a tight deadline to fix it. Otherwise, delisting could be in their future. So what is going on with MTNB? They have to file these reports with the Securities and Exchange Commission, or SEC, to keep investors informed. And this one is a Form 8. Think of it like a special alert for important news. The big news here is a notice from the NYSE American stock exchange. Basically, the company is in danger of having its stock kicked off the NYSE American exchange. This isn't the first time they've had this problem. Back in April, they got a warning because they had too many losses and not enough what they call stockholders' equities. That is kind of like the company's net worth. The rule they were breaking back then was needing at least $6 million in stockholders' equity for companies that have lost money for a while. MTNB was also told they didn't qualify for any exceptions, even for companies with a high market value. Now, on the 24th of June of 2026, they got another notice. This time, it is because they're not meeting a different rule. This one requiring at least $4 million in stockholders' equity for companies that have lost money in 3 out of the last 4 years. They reported having only $3,022,000 in stockholders' equity as of the 31st of March 2026. And they've had losses for 5 years straight, so they're breaking both the $6 million rule and the $4 million rule. Now, the company isn't just sitting back. They submitted a plan to the NYSE American back in May, outlining what they're doing to sort this out. The good news is, the NYSE American accepted this plan. They've given MTNB a deadline, the 2nd of October 2027, to get back into compliance. This is a pretty generous amount of time, almost a year and a half. During this period, the NYSE American will be watching them closely to make sure they're actually making progress on the steps they promised to take. If MTNB doesn't meet the standards by that October 2027 deadline, or if they don't show enough progress along the way, the NYSE American could start the process to delist them. The important thing to know right now is that this notice doesn't mean their stock is immediately delisted. Their shares of common stock will continue to trade on the NYSE American under the same symbol, MTNB, at least for now. This situation doesn't seem to be affecting their regular business operations or their reporting duties with the SEC. They also mentioned in another part of the filing that on the 26th of June they released a press release about all of this. They've included that press release as an exhibit to this report. This is pretty standard practice, putting out a public announcement to make sure everyone, especially investors, are aware of the situation. Scroll Exhibit 99.1 press release dated the 26th of June 2026. This shows they are being transparent about the notice from the NYSE American. Now, there is a section in here called Forward-Looking Statements. This is where the company basically warns everyone that they're making predictions about the future, and those predictions might not turn out to be true. They use words like anticipate, expect, plan, and potential. They're saying that while they have plans to regain compliance with the NYSE American's rules, there is no guarantee they'll succeed. They point to risks and uncertainties that could affect their ability to do this. It is a standard legal disclaimer, but it highlights that the path ahead for MTNB is uncertain. Looking at the broader picture for MTNB, the market cap is reported as $4 million with a current stock price of $0.64. They have very few employees, just 2. This is a very small company. The fact that they are struggling with basic listing requirements like stockholders' equity is a significant concern. Historically, companies that face delisting notices, especially those with consistently low equity and ongoing losses, often struggle to recover. For example, companies that have undergone reverse stock splits in an effort to boost their share price and meet listing requirements have often seen further declines, with around half of micro-cap companies that do this eventually delisting. A 1. For -20 reverse split, like what they might face if they don't fix this, historically has led to about a 40% additional drawdown for shareholders over the next 90 days. For a hypothetical $1,000 investment, that could mean it shrinks to around $600. The key takeaway here is the urgent need for MTNB to prove to the NYSE American that they have a viable plan to increase their stockholders' equity and show profitability. Their plan period extends to October 2027, giving them a runway, but they must show tangible progress. If they fail to do so, delisting is a very real possibility. The risk for current shareholders is that if the stock is moved to an over-the-counter market, liquidity and investor interest often drop significantly, leading to further price erosion. What I am actually looking for is concrete evidence of turnaround in their financial statements. proving their plan is working before that October 2027 deadline. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.